Okay, again, thank you everyone for joining us for this Placer.ai webinar, Holiday Sectors to Watch, a data-driven look at the strategies that could impact in an uncertain holiday season. Again, as we always do, a quick shout out for the Square, which is our hub for our free tools. We're constantly updating, launching new tools, new features within our tools. So if you want to take a look, please do. And it's Placer.ai-the Square. Today, the approach we're going to be taking to today is, again, a quick introduction to Placer for those of you who aren't familiar, then a very quick introduction to RetailNext for those of you who aren't familiar, and then we'll go into the content. The content is going to start with a quick retail status update, so to look at where we are from a recovery perspective, from the perspectives of both Placer.ai and RetailNext data. Then we're going to look at the sectors to watch, and then finally we're going to look at the strategies to deploy before ending in a Q&A. Now, if at any point anyone has any questions, please, whether it's at the top of your screen or at the bottom, depending on how Zoom is configured for you, there is a Q&A button. Shoot us over questions at any point in time. If they're within the flow of the conversation, we will get to them in a moment. Otherwise, we will try to get to as many as possible at the end of the webinar. So today, I am very excited to be joined by Lauren Bitar, Head of Retail Consulting and Consumer Experience Insights at RetailNext. Lauren, thank you so much for being here.
Thanks for having me.
Yeah, very excited. I think it's the combination of data sources today on this kind of single topic is really exciting for us, and we're really thrilled to be doing this with RetailNext. And to give you a sense of like why, let's actually kind of dig into a quick introduction to our specific data sources. So the first, we'll start with Placer. How do we get our data? So the first thing we do is we observe about 30 million devices throughout the United States. We then utilize industry-leading practices in machine learning and AI to make estimations based off of that panel and then understand visits to any location anywhere in the United States. And because this is such kind of a core resource, we're able to sparse it out into a variety of different dashboards and reports that our customers can use, everything from true trade areas, visit counts, obviously, void analysis, cross-shopping patterns, and much, much more. So again, that is how Placer gets our data, and I will turn it to Lauren to give us a sense of how RetailNext does their magic.
Thanks. So we also focus on retail analytics, specifically for brick and mortar stores. We can absorb a bunch of different data sets. So first and foremost, we do traffic counting for hundreds of retailers all over the globe. But we also pull in point of sale data, mobile data, CRM, and we're able to derive all sorts of insights on what's going on in the landscape. We also do specific client work for some of our clients. Go to the next slide. So our main devices are Aurora, which is what we use to count traffic, but the way that we do comprehensive customer journey analytics is by putting it all over the store and being able to stitch their views together in order to really map a customer across the store. As you can see, they're anonymous, we're not seeing a human being. But over time, because these cameras are on 24/7, you're able to start with aggregation of trends and really be able to deliver e-commerce analytics in physical stores, which is the part of the company that I actually focus on.
Yeah, I mean, so that is the two kind of perspectives that you're getting today. And now we get to dive into what we're all here for, which is the content, right? So let's start with kind of the retail recovery and a status update. And one of the things you're seeing in this slide is just overall where we were standing, and you're looking at that week beginning September 28th. Overall retail was still down about 13% year over year. So Lauren, I mean, I'll ask you this: like, we're seeing traffic recovering in most sectors, with some key states still lagging behind. And you think of California still being closed. When you look at the trajectory that we're on, how confident or optimistic do you stand at this point of the recovery period?
So it really, I wish we were having this part of the conversation almost a month from now. It's really going to depend. So we've seen a slow improvement from the time that stores started to open. Certain things like California having to shut down again with fires lagging behind. New York is also still having a tough time. We showed them about down 40% last week. But heading into the holidays, there's a little bit of uncertainty. So depending on whether you're looking at a bullish or bearish trend, it could be somewhere, we're going to say it'd be somewhere between down 10 and 20% to last year. So definitely still recovering. We're showing at about, from our traffic benchmarking, we're showing down at about 30. So still an improvement, but not back to where we were before.
No, I mean, certainly. And like, you know, talking about the data set that you're pulling and obviously specifically focused on kind of, you know, that core set of retailers. So as our data is looking at, grocers and the like, where essential retail, pulling that number up, the numbers you're seeing are lower, but it's focused more on that kind of apparel, beauty, home goods, et cetera. But it's not just that you're seeing traffic down. It's not the only trend. And that's why maybe there's this opportunity for confidence, because behaviors are shifting as well. And those might actually point to an opportunity for retailers in terms of more value in each visit. I mean, what is the trend that you're seeing, and how do you think retailers are adapting to that?
Yeah, absolutely. So the trend that really surprised us when stores started to reopen is, again, we do focus on a lot of non-essential retail. If you look at the graph below, you can see the green dots were net sales, and then the gray bars, I'll get into the pink later, are traffic. And when you look at the beginning of the year, so January week 1, you can see that the net sales year-over-year difference for brick and mortar stores and traffic, they were very close together. Net sales was slightly up in the traffic trend, but then as stores started to reopen, while we're showing net sales still down, its trend is far better than what the actual footfall trend is. And if you look at the chart above, last week, even traffic was down 33% across the US, but net sales was down less than 20. And that's, to your point, Ethan, because conversion has gone up a lot. Shoppers who are going to stores, they're not really going unless they really want to buy something, but also trends that we've seen pick up a lot, like buy online, pick up in store, or curbside, have really skewed this number. You see the shopper yield, which is basically sales per shopper, whether they buy or not, is up nearly 30% because of this.
Yeah, I mean, it's such an important point, because I think one of the things that we're seeing a lot, especially with earnings season, is that, Walmart is a great example. They talked about transactions, the number of actual purchases in stores being down at 9%, but we had their visit trends about around 11%. But their actual in-store numbers were still way up, because you have these huge increases in basket size, and you have this, different type of retail experience where people are coming to a store in order to do something and in order to buy something. And so it's a different type of environment that can be much more effective for retailers. And in that environment, different types of brands are succeeding. So, we have looked a lot at, Dollar General as being this perfectly positioned brand, mission-driven shopping. They have a wide array of products. They're value-oriented. But then there's others that are a little bit more surprising, like footwear bouncing back at a healthy rate. I think, what do you think that the brands that are succeeding in this environment have in common?
Yeah, so to your point, brands like Dollar General are probably succeeding for slightly different reasons. So, being a one-stop shop, really drawing in that mission-driven customer, if they just want to go and stock up on a lot of things and not go anywhere else. Footwear for us, I mean, first off, when everything was still closed, and that included gyms, part of it was everyone all of a sudden became a runner, because what else could you do? Or a cyclist. I was nearly run off the road a few times. But then also there were key launches that still happened this year with footwear from Nike or Adidas and Yeezy's collaboration. And so people still gravitated to those. There's limited edition, there's that sense of urgency. And then actually, I just think trying on shoes, even when people are concerned about a virus, it's just, I think people are less skeeved out by, let's say, something that might go over your head, like apparel.
Yeah, I mean, it's an interesting point, though. I do find the idea of trying on a pair of shoes that someone else has been on someone else's feet. So maybe that's more of like a normal times thing that grosses me out, as opposed to something COVID specific. But yeah, I think the interesting thing is that all these different sectors, whether it's their value orientation, or as you spoke about with kind of athletic brands of you're forced to run, or you have these, it's this alignment with the wider trends that COVID is presenting us. And so there's some companies that are able to identify where they fit within that trend, and there's others that struggle more. But when we think about sectors to watch, especially in this coming holiday period, one of the biggest ones is the home improvement and home goods sector. And part of the reason is it's so strong for like so much longer than I think many expected. So we were looking at, Home Depot and Lowe's showing the strength that they had early on. And there's so many reasons why, and their essential retail status. but I mean, I could tell you the narratives that support it, but it's still really surprising how effective this transition has been, where even Home Depot and Lowe's still doing well. The home goods brands, At Home, IKEA, Bed Bath & Beyond, really starting to show real strength. And I think, why do you think this sector is seeing such an extended period of unique strength?
Yeah, and the home furnishing was really what surprised me the most. I remember being on a Goldman Sachs call sometime in Q4, I think it was after Black Friday last year, and everyone was concurring that the home sector had been in trouble. There were a lot of players in the marketplace. It was saturated. And if you see the chart to the left, at the beginning of this year, the home trend, which is the pink line, was worse than the actual traffic trend. Q4 actually finished for us with home down about 9% versus our average, which actually maybe down 5%. But you can see now that it's really been bucking the trend, at least by 10 points over the last few months, and then it's continued. My guess is for that, or what we're hearing is people are still spending a lot of time at home. A lot of schooling was still happening at home, and parents had to think through, okay, how are we really going to do this learning thing and home office thing? And I'm going to be able to, take a webinar and not go crazy with the kids close by. But being able to do those DIY projects, which places like IKEA specialize in, has proven to be just a great activity to kill time, but also to help your home. And I think now, as the time getting older, it's changing to winterizing your home and getting extra pain, because most people might not be traveling to go somewhere this holiday season. So if they're going to be stuck there, it might as well be, an oasis.
I think you touched on something that's so important, especially, travel is one of these, it's a topic we're not discussing a lot, especially when we think about the pessimism ahead of the holiday season, of this extra money that people were normally spending on tickets and vacations and trips. And what are we going to do with it? This idea that I can, turn my house into this vacation or this oasis is huge. And, a comment did come in about Bed Bath & Beyond in terms of, they're closing 60 some odd stores. And I think we do need to kind of keep in context, like Bed Bath & Beyond was not doing exceptionally well in 2019. And there was not a lot of excitement around the brand and their potential. And yet, so this right sizing approach, it's going to happen. Stores are going to close, but they might be closing at the perfect time, because there's this other element to help you get through a difficult period. And we can touch on that. It was a great question that came in. We'll touch on that again later. But another sector that I think has been super interesting is the beauty space. So, you look at brands like, Ulta, that's just, down in terms of foot counts, down just 10% in that week. In that last week that we were measuring, and Bath & Body Works doing exceptionally well. Again, with a week where they were up 12%. Now that was obviously the later Labor Day. So, you're competing a Labor Day weekend competing with a non the year before. But still, there is this really exciting push here in a space that's, incredibly discretionary. So there was a lot of thought that maybe they would struggle. So I think, what is it about these brands and this sector that's giving it extra pull even in this difficult environment?
So beauty, we know, tends to be very recession proof no matter what. And in 2008, that was one of the bright spots out in accessories. And this is no different. Ulta and Bath & Body Works have a ton of stores, even more than Sephora in the US. And they are in several types of formats, like malls and also strip mall type areas. And we know, I think we'll talk on it later, about indoor versus outdoor trends. But Ulta really tends to be in those outdoor centers. So they're there for their customers. The price points are also right. Versus when you look at Sephora, they tend to skew to a little bit of a higher price point. So they just have a lot going for them there. And I mean, Bath & Body Works also had to close some stores, but again, it is right sizing, and it was a small portion of their total compared to their sister brand, Victoria's Secret.
Mm-hmm. No, it's a great point. I mean, I think even with that right sizing, it's something we should, kind of save at the end for the questions, but it's such an important trend that's happening in retail. And it's, speaking of a sector that is going to be happening in a lot more, is apparel. It's a very difficult time to be an apparel retailer. I mean, if you think, discretionary spending is down, we're not going to work, we're not going to kind of special events. You wear a shirt and no one knows that you're wearing sweatpants. Exactly. This is about as much of a thing as you see. I think there is a really difficult situation, except potentially the holiday period could provide at least some reason for optimism, but that requires action. So I'd ask you is like, do you think there is reason for optimism for the wider space heading into the holiday season? And what do retailers need to do to grab that opportunity?
Yeah, so to me, it's going to come from two places. So one, of course, self-purchasing, so for any events that you might be going to, but then also make it easy for gifting. So for self-purchase, one of the things that I had been looking at was the impact of fitting rooms. So we know the trial is very important, and non-COVID times, using the shoppers that use a fitting room tend to convert 2 or 3x times more than just like a regular overall store. But fitting room use is at about the same rate or down. Part of it is they're coming in to buy something like curbside. They're not really walking much in the store and they're not shopping around. There's also that anxiety that we've seen about going into the fitting room and trying on clothes. So really, however retailers can communicate what their standards are of keeping customers safe, keeping it clean. A lot of retailers, if clothes are tried on or returned, they're being held and cleaned for a certain amount of time. So still, how can you encourage trial? Also making gifting easy. So buying apparel can be tough, especially because of sizes, and you want to coordinate things. So being able to merchandise, let's say by style, story or outfit, it makes it a lot easier for someone coming in for somebody else, because if you're not even shopping for yourself, you just don't want to have to think about it. And being really transparent about your inventory, because sizing is a factor versus beauty, which is one size fits all.
It's so important. And you touch on the biggest thing that apparel has to deal with is that, in the end of the day, returns are a much bigger issue. When you think about e-commerce purchases and apparel, it's very often built in. I am buying multiple sizes, knowing I'm going to return some of them. And that's a huge onus, especially in this environment where it's more difficult to turn around that merchandise to cope with. And so there's this big question of, how do we get people into stores? How do we get them, into fitting rooms in some way, shape, or form? It's something that we'll talk a little bit about more when we talk about kind of the tactics that can be used, but this is a super critical thing. And even when you think of, mall owners or shopping center owners, how do you support in this environment where, can you give an extended area where there's like, fitting rooms or identify this challenge that needs more space than it would normally require? I don't think it's a small issue, and it could be the difference between a really good season and a bad season for a lot of these apparel retailers. But, thinking of, apparel, which is facing so many obstacles at so many levels, there's some retailers that it feels like everything is aligned for them to succeed. And no space kind of matches this more than this kind of these big box giants. So you think of, Target, which is already up year over year, on a weekly and monthly basis. Walmart, which even though visits are down, basket size is so much larger that it's not really hurting them. The Dollar Generals of the world, even, I'll throw in Costco's into this mix. Everyone with these massive wide arrays of product ranges that you can get, it feels like these are the places to watch. And the other element is they're not just well situated for the peaks of the holiday season, but they generally see strength throughout. So these are brands that see more visits in the 3 days before Christmas than they do in the, Thanksgiving, Black Friday, that Saturday of that same weekend. And it's such an important element to remember. But I think the bigger question is not, we expect a lot from these brands, but if you're a smaller company, what about their strength can you learn and try to apply ahead of the holiday season?
So, and that really is the $1 million question, because I know retailers feel like that, also just about Amazon in general. So to a certain extent, things that you'd want to have for sure is being able to let the customer shop however they want, whether it's online or buy online, pick up in store, curbside, et cetera. So that is quickly becoming table stakes. But trying to beat them at their own game with a lot of things and pricing, it's generally going to be a race to the bottom. You're going to lose. Those small players just won't have the same kind of purchasing power. Instead, what I would focus on is really on knowing your customer and the localization of your assortment where possible. You can clientele a lot more than a big box store can. They just don't have the labor model set up for that. And so really hitting them in the places and the experience that they're just not built for. And that way you can also watch your margin, because too many smaller players have gone down trying to beat them at this, be everything to everyone game.
I think you're dead on that. What you lose with size and scale, you gain in the ability to be personalized and focused. And again, we're in an environment where basket sizes are growing. You can get someone in a store and you can give them the opportunity to accomplish more with that visit than they would accomplish by, in the past, you would go to the mall and you're going to go to a lot of different places. But if you can get everything done in one place, you will. If you can figure out how to create that draw into your location, it's going to go a really long way. And even the fitting conversation, you were just saying, I think you're dead on. Like, how do you make that easier? Because if you make that a more palatable experience in your location, you're going to drive that visit. And there could be really big ramifications to that success. And so when we think about not just kind of the players and who are succeeding, but what are the trends that really need to be monitored? One is, the merchandising question in this season, I think is unique and uniquely challenging. And, I'll ask the first question is, how do you approach merchandising in this new environment in a general way?
Yeah, absolutely. So first off, you're wanting to create room in your store for shoppers to shop, because the less room you have, the lower your occupancy is going to be, and for health and safety standards. So one thing that we're seeing a lot, and frankly, retailers should have done this before COVID, is reanalyzing how many SKUs they're carrying in a store. So that's SKU rationalization, and then your facings per SKU. So many retailers that I work with, and non-essential, will have the same product in 3 different places in the store. It's just diminishing returns for the real estate you're giving. It confuses the customer. They don't know if they've walked the whole store or not, and it's just taking up space. And especially now in an environment where, especially for categories like apparel, people aren't going to buy something else. It's very much, it really does remind me back to 2008. Everything you have should just be special. And it's not about just having a million SKUs to have a collection anymore. So being able to cut down your SKUs, only buy what's going to really delight your customer, and then really reducing it to make it an easy shopping environment. Again, we talked about fitting room use, of course. And then we've been talking, especially at RetailNext, about occupancy and monitoring occupancy for health and safety as stores started to open. But another thing to consider is looking at interior and fixture occupancy. So monitoring how are shoppers feeling? Are they comfortable with shopping anywhere near each other in a fixture? Are they shopping too close to each other? How do we space things out? And that's another thing that we've started to look at as well. So not just are they in your store? And a great example of this is, let's say a department store, multi-floors, they'll have a certain occupancy level, but being able to understand that how many shoppers in one particular area versus just I'm allowed to have 500 people at a time would be very important. And the lastly is assigning sales per channel. One thing that I'm hearing a lot that it's been exacerbated recently is when you've got services like ship from store, or you do a lot of transfers to help customers who are buying merchandise that's not in the location. There's been some hesitance from associates in other stores from feeling comfortable with letting go of the merchandise, because then they're not getting the credit for it. They don't have that inventory to sell, and that hurts their commission. So really thinking through how you're assigning sales per channel, whether it's going to be for .com or assigning credit across stores, will really help that, because the whole point is to get the merchandise into the customer's hands who wants it, but keeping your associates happy and taken care of as well. And so that's something retailers really need to think through.
It's a really interesting challenge. And I think, even more is there changes, if you think about a normal season, you kind of build around certain expected spikes, but this year nothing can be expected, and you don't know when these kind of runs are going to happen. How does it change the way you view kind of your merchandising approach?
It does become a lot more difficult, and you're really going to have to be monitoring real time, which has not always been a strong suit for a lot of different retailers because of the technology required. So to me, again, it's really understanding what's going on in your stores and looking at your data to be able to quickly react, because we don't know what's coming. Just looking at a weekly flash report isn't going to be enough. I'm trying to understand, okay, what is selling, and being able to quickly go off of that wherever you can, having like the central inventory, like hold, or if it's not in your distribution center in certain hubs and certain stores, to be able to quickly move merchandise if we're not sure on which season bets are going to actually pay off. But it is a huge question mark.
No, that's just an important one. I think the other thing that you and I spoke a lot about was, there are ways to counter some of the negative trends that we're facing. And so one of the ones that, we were discussing was this idea of like appointment shopping. And the graph you're seeing here is actually, it's Best Buy data. And instead of focusing on Best Buy being almost back at kind of 2019 levels, which is just a hail to Best Buy moment in and of itself,
Mm-hmm.
you look back in kind of June time, late May, you see visits down 60%, even when stores were actually back open. But what was fascinating was that was based entirely on appointment shopping, which said, Best Buy said, we're going to be open, but we're going to limit, but come in, range of time. I think what's so fascinating about this concept is that it helps you bring people into stores when otherwise you wouldn't be able to. It gives them a personalized experience. It increases the likelihood that they're going to convert, and it likely builds a long-term relationship. And I wonder, I think it's, this is such an exciting opportunity. I think, how do you see it being leveraged elsewhere in other sectors? And do you think it's something that has long-term staying power?
Yeah, this we're seeing becoming more prevalent in specialty, especially as we move into the holiday season, when we know stores would be more crowded. I think this particular initiative is well overdue. In previous years, people would dread going to the malls because it would be really crowded. You're going to be jammed against people, pandemic or not. It's not always pleasant. But this, being able to have appointment-based retailing is, I think, a trend that's going to stay. Probably not for every type of category or retailer, but certainly those that would focus on more fashion-forward type of items, because it really does allow you to build that personal relationship. If you've got a CRM able to keep track of what they're doing with your customers, really get to know them, and for them to be able to come in and you've already perhaps pulled some items for them. Nordstrom has always been great at this kind of thing, and they've been always ahead of the CRM game. I think it's really going to matter. Perhaps in more essential-based retailing environments, perhaps it's not going to be as big of a deal once occupancy goes away, but I think this has staying power in a lot of other areas.
I mean, I agree. I don't see how there's very few industries that I feel like don't gain value from this. And in fact, the ones who are struggling the most are often the ones who have the most to gain from this. You think department stores. If I can, as a department store, say, hey, come in at this time, you're not going to have crowds. We're going to give you attention. We're going to be able to figure out the right size for you and then find the right items for you. And then a month later, when you realize you're missing this one thing, we have already done this personalized experience. I think this is not just the way of the next few months. Like you said, for some of these sectors, this is the way forward. This is something that you need to figure out. And how do you create this personalized kind of shopping experience is critical moving forward. That's what, the lessons of the digital world is personalization. And so if you can figure out ways to bring that offline in a way that's unobtrusive and asked for by the customer, that's really, really exciting. And then the last thing, you and I, we spoke about this quite a bit, of this kind of indoor-outdoor divide. And I think it's a huge question in retail right now of where do you want to be set up? Are you getting extra benefits from being in an outdoor center? What we've seen is that through September, outdoor centers are bouncing back faster. And we have a report coming next week on outlet centers specifically. And they're doing even better as part of that group. But then malls are making a comeback. And so there is this feeling of like, the rain is coming, the snow is coming. Like, are malls better positioned because, the indoor shopping experience will be more protected in that regard?
It's a really good point. And we had really similar numbers as far as indoor, outdoor. But what we had noticed is prior to COVID, the mall versus non-mall football trends, it was kind of a wide margin between the two of them, but it's gotten very close together. Actually, it was only between a couple of points, I think, in our last report, which is really interesting. Part of what, certainly the indoor malls will have an advantage once it becomes very cold outside for various parts of the US. One thing to keep in mind, though, is many malls are not allowing queuing and such outside of stores. So the malls, some of them are making sure that they've got some sort of collaboration with the retailers to be able to let the customers queue on when they could come inside, sort of like a Disney Fast Pass. So you want to have those strategies in place because yes, it's going to be better to protect against the elements, but you're still going to have this occupancy issue. And with the holidays coming in, that is generally when people shop more, that could be more of a problem.
It's you make such a good point. And I think there's one of the things that we've been, if anyone by the way has any questions, we'll be getting to that in just a minute. But one of the things we heard in a previous webinar we talked about was the use of space. Like how do you maximize the use of space? And if you own a mall, if you have garage space that you can in theory repurpose to some other element, to figure out how do you support your retailers to give them the room that they need in order to succeed, it's not a small benefit that you could be giving them. And it's a really interesting point that you bring up. In terms of questions, I want to go with the first one. We had it come in about Bed Bath and Beyond, and I think it leads to this right sizing question of when you look at the retail market and the right sizing trend that we're seeing with everyone from JCPenney and Macy's and Bed Bath and Beyond, how do you see other brands taking advantage of that shift?
I mean, so many brands have been doing that, as well as, the ones that had decided to finally go chapter 11 is the time to do it because it's the pandemic. What are you going to do? But, this trend isn't shocking for me at all. It was very needed. So I was still working in retail I was already working in retail when we had the last recession, and I watched so many stores close and bankruptcies happen. And then over the years, especially at my time at RetailNext, I saw so many new stores open, and I'm a big proponent of stores, but there's the right amount for each kind of retailer. And I had actually said last year, have people forgotten what happened about, like a little over 10 years ago? So I think we're going to continue to see this. I think it's the right thing to do. It's not that stores are in trouble. It's about finding out the right thing for you, because after a while, every location's giving diminishing returns. Associates who are your greatest asset, but also largest expense, they're not cheap resource either. And there's just all the overhead involved with it. But I think retailers also understand that stores will continue to be important. .com advertising is not an easy bullet anymore. Anyone can have a brand. You have an Instagram page. So being able to have stores is basically 24/7 marketing for you. So it's just about having the right amount.
I think you nail it on the head with it's how do you're essentially trying to, how do I reach my maximum audience with the least amount of spend? And so you want to have an optimized footprint. And what, those of us who come from kind of the world of digital and then have kind of are now, for me, this idea of optimization is something that happens all the time. Everyone, if you think of any online operation, it is changing every single day, constant tests, removing, adding. I think what's happening offline is really good. Right sizing is the best thing to happen to retail, in a very long time, because it allows these brands to sustain. The reason Sears closed is not because Sears is horrible. It's because, you tried to be everything for everyone and you thought you could be everywhere. And at a certain point, you don't need to be everywhere, and your costs, and your operational costs outweigh what you can actually do. The other thing,
back to your point about personalization, there really is a spectrum between personalization and scale. So, a lot of retailers are making the decision to go back toward that personalization side of the spectrum, and that's great.
Yeah, I agree with you completely. Another question that came in actually before, during the week via email, I would say to anyone who's listening, like we're send in questions even before, because we do try to get to as many of them as possible. Privilege those ones, obviously. But if there's one holiday sector that we're not talking about that you expect to surprise, what would it be?
I would bounce that to you. I would obviously expect spirits to do well, but that's not going to be a surprise.
You know what? I think everything is surprising at this stage. My big one that I'm still holding out hope for, like at the beginning of the year, we called Bed Bath & Beyond. We did it in January. We wrote a report that had our brands that were going to overperform. And Bed Bath & Beyond was the bold one that people were like, come on. We're like, now they just had their same store sales growth and we're kind of taking our victory lap. I still believe in office supplies. I'm waiting, Staples saw this September jump. and I'm like waiting for them to add this other gear for the holidays. But like what we talked about, like, you know, what has Best Buy done so well is the Geek Squad and the we're going to help you. I'm like, I'm waiting for one of these brands to just grab the bull by the horns and say, yeah, it sucks. We're going to work from home a lot. We're going to help you turn your home office into the greatest home office ever. We're your guide, we're your friend, we're the brand you're going to trust. And so I'm rolling the dice on Staples, and if they're right, I have a gentleman's wager with Chris Walton, and so I'm hoping to win that one.
I think that's a great point, and really needed, because who wants to sit there and fumble with doing all of those things, and someone will, that someone's going to come and do it right, and the webinar is just going to work.
Yeah, I agree. I mean, and this will be our last one, but this is a good question that comes in on specifically, the side, like, people are not venturing out as much. And so one of the questions came in, well, what about like home cooking kits, and like the HelloFreshes of the world and that? And I would love to hear your thoughts on it. I know it's not one of the core spaces you operate in, but it would be interesting to hear your take.
Yeah, it's interesting. What I'd actually seen spike more was not the kits, but actually people going out and doing everything from scratch. I mean, I'm sure you had to witness the everybody baking bread thing a few months ago. And it was still huge. So it was just like, we're stuck. Forget just buying the kits. I have the time to buy all the goods and make it from scratch. I definitely think home cooking will continue, but at least as restaurants start to open, there's probably going to be a short-term decline, because people are just going to want to go out and not have to deal with cooking.
Yeah, I'm not I don't know, I don't hope no one from any of these brands is on, so apologies in advance, but I don't believe in these meal kit companies. Their acquisition costs are enormous. It's really difficult to scale and grow. And it's just waiting for like a Wegmans or a Publix to be like, hey, we're going to do it and buy it when you're in the supermarket. And like all of a sudden your Wednesday night is planned out on your Monday shopping trip. With that, I mean, we'll close up. We're kind of running short on time, but Lauren, thank you so much for being here. It was such a pleasure to have you.
Thanks for having me. I hope we can do this again.
Yeah, absolutely. And for everyone who joined, thank you so much for being here. We really appreciate it. We've got a webinar coming next Tuesday, where we're going to be joined by Deborah Weinswig to talk about all things retail and big trends. And then the end of the month, we're going to be joined by Sukarita Kodali from Forrester. Also to kind of give a status update on the retail recovery, analyze what it means in the kind of commercial real estate world and through that lens. And so, please keep an eye out and join us for those. And thank you again for being here. Hope everyone has a wonderful rest of the day. And any ideas, any thoughts, any things you want us to cover on these webinars, please reach out to us. I'm at Ethan@Placer.ai. And if you don't want to talk to me, it's ideas@Placer.ai. And again, thanks everyone for being here. And thank you, Lauren, for joining us.
Thank you. Thank you so much.